Hello, Oracles. Today we're going to discuss some ways that you can go out and see for yourself if recession is coming. What are the signs that you can go and look for that are going to tell you, hey, I think we're getting closer to one? Now, again, I'm not saying we're going to get one or not, but I've seen a lot of signs kind of showing us and pointing us that we're heading in that direction. So I hope we do get a soft landing. I hope the Fed pulls this off, but I truly don't know if it's going to happen. And I'm seeing a lot of signs and similarities to what we saw back in the great financial crisis that are kind of leading me to believe that we're kind of getting closer to that. So if this is stuff that you like to see, please hit that like button down below, subscribe to the channel. Really helps the algorithm. And I love sharing this information with you guys and kind of spitting my thoughts out there and then having the conversations with you guys in the comments as well. And on Fridays, we do live streams. Also, I will be back at it this Friday evening to do a live stream, and it's easier to chat with you guys right there, right live. So here's some of the signs. So again, we've been talking a lot about unemployment, and you guys have been following me for a while, know that we've been talking about unemployment signs, recession signs coming from that. And then we've got the inflation numbers that are coming down, almost a deflationary status. But what are the things that you can go and look for? And it's, sort of like you're investing with your portfolio. If you really want to know what's going on with your companies that you're investing in, like a Tesla, for instance, go down to their factories, talk to the workers that are there. How are things going on the factory floors? Go down to those delivery centers, ask the people there, hey, how have deliveries been going? Are they doing well? Are they not? Actually talk to the people who are working there on the front lines, and they'll be able to tell you everything that you want to know about what's happening. Now, when that's happening, also ask people about, hey, how's hiring going? Have you guys been hiring anybody new? Have you guys been laying people off that maybe people don't know about? Have people been kind of just quitting their jobs and they just haven't been filling those positions? Asking questions like that are going to give you answers that you're not going to be getting in immediate reports. Don't forget, a lot of the reports that we get that come out when it comes to unemployment and jobs, it's all lagging data. If you want to know today's data and what's going on, go talk to someone today. Back in 2007 and 2008, I was working at Home Depot at that time. I was moving up the chain very quickly. I went from a millwork associate to a department head within 4 months. And then within 2 years after that, I was already being looked at as an assistant manager. At that time in 2007, they put a hiring freeze on. And then they took all of the loss prevention people from each one of the stores and cut those positions entirely. Now they tried to go and find homes for all of those people. So for me, from a department head going up to assistant manager, what they ended up doing was they took those loss prevention people and put them in any open manager positions that were out there, thereby showing kind of like a, not to say that they were like losing jobs or laying people off, but they just kind of repositioned those people within the company to not really show layoffs at the time. And so for me, I just didn't get promoted, and I had to wait 2 more years before I ended up getting promoted. So that could be going on right now a lot. So ask yourself, talk to people that are out there. And I've had a couple of conversations very recently within this past week with some HR directors telling me that their companies right now are doing hiring freezes. That's basically the second step towards this unemployment and recession. The first step, and we already saw some, was people kind of trimming some excess fat. So we saw that trimming the excess fat kind of as the year played on. We've seen Google doing some layoffs, Microsoft doing some layoffs, a lot of big tech companies doing layoffs, which is wild considering all their numbers in their earnings reports were doing so well. If they're doing so well and bringing in crazy revenue, why are they doing layoffs? Well, they did. So that's one of those first signs that you see coming out there, is just that trimming of the fat on the very fringes. Now you've got things going on like Amazon coming out and saying they're bringing everybody back to the office. When you bring people back to the office, you're naturally going to get people who are going to say, well, screw that. I'm not coming back to the office. I'll go find another job elsewhere, or I'll try to do something on my own. So you're going to get that as the next sign that's coming. And along with all of that, you're going to get the hiring freezes. So you get those hiring freezes, you're kind of eliminating positions within the company and then filling any open positions that you have with the people that you're kind of eliminating positions from. So you eliminate a position here to fill a position here, and then you start looking at job openings. Job openings have been coming down significantly. So again, because you've been filling within the company, you have those job openings that are getting shrunk. These are the little signs that you want to see. And again, those job openings being shrunk are still lagging data. So go out there. Maybe you guys have done it, and you can let me know in the comments below. Have you talked to anybody or heard from anybody out there who have had their job position eliminated? Maybe they've been moved into another position, or hearing about any of that going on at any other companies that are out there. because typically that's one of those big signs that are out there underlying that, hey, we see the signs coming. We've got to keep up those bottom line numbers. We've got to cut payroll somehow, but we don't really want to do these layoffs. So again, if companies start announcing these layoffs, that's just bad news. So they don't want to put that out there because that, again, is just going to lead to that self fulfilling prophecy. They start announcing layoffs. People then get those recession concerns. The stock market starts to sell off. That's just going to perpetuate even more layoffs, thereby making that consumer spending go down. Big problem. So they don't want to say anything like that. They just kind of want to try to take care of things internally and resolve that problem there. But by doing that, it kind of just takes us to that next step, because now all those people who did get laid off over the last year, or any of those small businesses that closed and have all of those people who need to find jobs, can't find jobs because all the jobs that are out there are getting filled internally by all of these other companies because they've eliminated some positions. So again, these are just the signs that I'm seeing that are kind of underlying, and the stock market right now still going up and up and up is a sign that we also saw during the great financial crisis when a lot of this was going on. Again, 2007, this was going on, but we still saw the stock market going up. We talked about it the other day when the Fed cut rates 50 basis points, the stock market continued to rally over that time despite unemployment going up. So just the things to pay attention to. Now, some other news we got today about China infusing some money into their economy to try and stimulate it some may sound very bullish. And for the Chinese economy, that is very bullish. That is great for them. They've been on a downward slide for a while. It's kind of like they've been going basically through their great financial crisis over the last couple of years. This, I think, is going to be good for them to stimulate. Why is that a bad thing for us? The reason it's a bad thing for us is because with all of the prices and deflation going on over in China, it has brought the prices of things coming down here in the US. Because we import so much stuff from China, our prices have come down. Now, it hasn't been deflationary. We've just seen the inflation come down. But if you look at trueflation, we are significantly lower than the 2.5% that we've been seeing for our CPI data. So with all of that said, you start seeing those numbers going up for China. You start seeing inflation coming back to China. That means the prices of goods coming here to the US is also going to go up. Now, I don't think it's going to go up to a point where all of a sudden inflation is going to rear its ugly head again here. But when we're looking at consumer credit here being a major issue at the all-time high it's at right now, people don't have the money to spend anymore. They've already capped everything out because inflation was so high. If people start losing their jobs and the prices of things start to go up even just a little bit or stay where they're at right now, that could end up being a problem because people aren't going to have the money to spend on things. So China's economy doing well could end up being detrimental to the US economy here. These are just things that I'm paying attention to. Again, a lot of moving pieces going on out there. Maybe the Fed's going to do this right this time. I don't know. But the signs that I'm seeing right now, again, are very similar to what we saw during the great financial crisis. Now, what we don't have right now is the housing market issues that are going on. What we have right now is a lot of people who had refinanced or bought houses when we had the interest rates that were well below 3%. So we have people in the 2.5% to 3% range. They're not going to be selling their houses at all anytime soon. So that's going to keep inventory lower. That means that housing prices will probably end up continuing going up if we end up seeing mortgage rates coming down. Mortgage rates aren't going to come down quickly unless the Fed cuts rates quickly. If the Fed's anticipating a 25 basis point cut in November and then another one in December, we may see rates come down a little bit, but they're still around that 6% mark right now. And nobody's going to be selling a house at that 2.5% to 3% to trade in to get a house at 6%. So that's kind of where we're at right now. And people might be waiting, and we might have a lull in that housing market with, hey, maybe inventory isn't high. And with builders out there, if their interest rates are still high, they might not want to be borrowing either to be able to build more houses, thereby keeping inventory low. That keeps the prices of houses going up. Prices of houses going up with a still higher interest rate means that people still can't buy houses. But the housing market, I think, will still be stronger because of that, because you don't have a lot of people out there with huge loans that they're not going to be able to pay off. But even if the housing market is going to stay strong on that regard, the fact that we have consumer credit as high as it is, with some credit cards pushing 30% interest or more, that is absolutely ridiculous. And a lot of the loans that these people have taken out, we still have interest rates that are going to stay high for longer. Again, we talked about it the other day. Just because the Fed is coming down on these interest rates doesn't mean that the interest rates that people are paying are going to come down quickly at all. Some people are going to be stuck in them. And because it's going to be staying higher for longer, that could be where the credit ends up cracking. We could be seeing it happening with credit card debt. We could be seeing it happening with other debt. Like, for instance, I bought windows for my house and it was an 11% loan. Not a huge fan of that, but it's way better than some other percentages that I could have gotten. But for me, I'm going to pay that down as quickly as possible. I have a couple of tours lined up for my house this week to get some tenants in here. I've got the ball rolling right now to get myself set up for Section 8 as well. Once I get the kitchenette put in and I've got the ball rolling on that, I'll be able to have that income coming in to be able to pay off that loan quicker. Because to me, I don't want any loans that are going to be an interest rate higher than my mortgage right now. And my mortgage is at a 6.5%. My goal is to pay off those windows, get that down, and then in a couple of years, I'll have that money saved up. And when the interest rates are lower, I'll refinance the house. Hopefully under 5% would be the goal. Now, I am planned and set myself up for that. Many other consumers out there have not. They're sitting on unbelievable amounts of credit debt at 30%. Do you know how hard it's going to be for them to be able to pay that off? I was paying off credit card debt around that 22% during a time when the economy was doing very well. My pay was getting increased very well. I was getting a raise at my job. I was getting promoted at my job. I was able to pay off all of that credit card debt much quicker. This is not the scenario we're in. If we're in a scenario and an economy where people are getting laid off, the jobs market is getting worse, we have higher unemployment, people are not going to be paying off those loans anytime soon. That's not going to be good for banks because banks are not going to be able to get their money coming back in. You're going to see worse and worse bottom lines coming in for banks. That's going to end up bringing it down, and then banks aren't going to be loaning money out. Their numbers aren't going to look good. That's why I sold off Bank of America last week. You see those numbers coming down, and I see that coming in the future. It's not going to be pretty. So again, these are just the signs that are out there pushing in that direction. And again, it's a matter of we've got the tension. It's like pulling that rubber band. We're stretching it as far as we possibly can. When is it going to break? Or are we going to hit a point before it breaks and we can kind of ease off of that tension? Again, I don't know. It's just I'm waiting to see these signs. Are we going to crack or are we just bending really far right now? So you guys can let me know your thoughts in the comments below. Do you think we're going to crack and break, or do you think the Fed is going to save us and we're actually going to be able to reel this back in? You guys know my thoughts. I think we're about to break. I think we're about 6 months or so away from breaking it. I think the stock market right now is still overly optimistic about it. Again, we saw the same thing happen at the great financial crisis. The market was overly optimistic, thinking things would never break, and then bang, things broke and things fell very quickly afterwards. So we're just waiting for that trigger. And again, oil being as the low as it is right now, we have some more tensions going on in the Middle East. If that escalates and we end up getting oil prices spiking, then we could be in big, big trouble. Just the things to pay attention to, because if you see any one of these black swan events or something that's going to trigger it like that, and we get that big trigger somewhere, you're going to see the market implode. So just make sure you're protected for yourself just in case. Again, hope we don't get there. I'm hoping that all the safety measures I'm putting in place right now don't have to be used, but kind of think that they will be. So hope you guys are going to be safe for yourself out there. Let me know if you guys have been protecting yourself. Let me know what you guys have been doing. I know some of you have told me that you've got significant cash saved up. I think that's a safe place to be at the moment. Again, if you're sitting at the market, so be it. If you've got the cash, that's not a bad thing. And if we see that the market's going to recover and we're going to come out of this, then you deploy all of that cash. So you wait for the positive signs, but I haven't been seeing very many positive signs as of late. If I do see them, I will absolutely share them with you, but really haven't been seeing many. So thank you guys so much for watching. I appreciate all of your support. Have a great one.